It is believed that an ancillary stock for a booming industry can be a more lucrative bet than core industry stocks sometimes. One such ancillary stock is small-cap Mtar Technologies, a recently listed company supplying components to clean energy, defense, and space sectors. In this video, we'll conduct a fundamental analysis of Mtar Technologies to know if it is worth adding to our watch lists. Company overview. Mtar Technologies was established in 1969 as a supplier of coolant channel assemblies to the Department of Atomic Energy, Government of India. Since then, it has evolved into a precision engineering company with an international footprint. It is involved in the business of manufacturing critical components for civil nuclear energy, fuel cells, aerospace, and defense industries. Its workforce of over 1,740 employees caters to high-profile domestic and international names such as Nuclear Power Corp. Of India, ISRO, DRDO, HAL, Rafael Advanced Defense Systems, Hitachi Zosen, and Bloom Energy. The company owns 7 manufacturing facilities including an export-oriented unit in Hyderabad, Telangana for machining, fabrication, brazing and heat treatment, assembly and testing, and surface treatment. The company went public in March 2021 raising 596 crore rupees, out of which 473 crore rupees was an offer for sale. We'll read more on segment analysis and shareholding structure in the sections ahead. Segment analysis. Mtar Technologies broadly classifies its product portfolio into 4 segments for internal reporting purposes: civil nuclear energy, fuel cells and others, aerospace, and defense. The share of fuel cells and others in the aerospace division in the total revenue has grown multifold over the years to 62.61% and 14.99% in FY22 respectively. The civil nuclear energy divisions and defense divisions share has come down as their revenues have largely remained the same over the years. A snapshot shows the sectorial revenue breakdown of the revenues of the company over the years. As for the geographical revenue share, income from abroad accounted for 62.73% of the total income for the company. However, the concentration of the customers is a cause for concern. 2 customers together accounted for 233 crore rupees or 73% of the revenues in FY22. Industry overview. Clean energy, fuel cells. We'll start with the clean energy, fuel cells industry as it is the largest division for the company. Fuel cells, like batteries, are used to provide power. But unlike batteries which need to be recharged, they provide energy as long as hydrogen or any other fuel is supplied to them. They are used in military equipment, unattended sensors, unmanned vehicles, automobiles, and more. According to AEO 2020, the adoption of fuel cells clean energy is projected to grow from 150 MW in 2019 to 185 to 200 MW by 2025. Overall, the sector is estimated to grow 14 to 15% every year between 2020 and 2025, moving the technology towards mass adoption as the cost comes down. Clean energy, civil nuclear. The civil nuclear energy sector is all set for rapid growth after the renewed focus of the government on it. NPCIL has planned to float tenders of 14 reactors presenting a 350 435 billion market opportunity in the equipment space. Including the maintenance and refurbishment market, the subsector is projected to grow 1.7x during the next 5 years. Aerospace. As for the Indian aerospace equipment market, it is estimated to touch 4,600 rupees to 4,800 crore rupees, compounding at 7 to 8% every year by 2025. Overall, the outlook for the sector is weak because of rising competition globally. However, rising private participation, small and micro satellites increase, and a rise in demand for SSLVs are some of the key growth drivers for the future. We have not devoted separate space to the defense industry as it comprises a small portion of the company's revenues presently. Revenue and net profit growth. The revenues of Mtar Technologies have grown at an impressive CAGR of 15.07% p.a. over the previous 5 years from 159.60 crore rupees in FY18 to 322.01 crore rupees in FY22. The bottom line grew by 55% from 39.20 crore rupees in FY19 to 60.88 crore rupees in FY22. We have excluded FY18 net profit as the base period for calculating growth because of a low base. The net tax rate was high for the company, resulting in a depressed net profit for the year. The table highlights the growth of operating revenue and net profit of Mtar Technologies for the previous 5 years. Operating and net profit margin. The operating profit margin and net profit margin of the company have remained volatile over the years because of the difference in net tax, other income, and the rise in material cost. It is a capital-intensive business with exposure to global headwinds when it comes to raw materials cost. Thus, any reduction in operating margins is more pronounced in the bottom line. Overall, Mtar Technologies is a high-margin company. The table shows the profit margins of the company for the last 5 financial years. Return ratios, ROE and ROAS. In this section, we'll analyze return ratios to assess the efficiency of the business as part of our fundamental analysis of Mtar Technologies. Historically, the company has clocked return ratios, ROAS and ROE for its investors. The figures have come down in the last 2 fiscals as the company raised money via IPO and term loan. The data presents the return ratios of Mtar Technologies from FY18 to FY22. Debt, equity and interest coverage ratio. Moving on to the debt analysis of Mtar Technologies, we can note from the data below that the debt-to-equity ratio of the company reduced in FY21 when the company raised money through the IPO. But it increased in the next fiscal on the account of fresh borrowings for the investment in the Adibatla plant and higher working capital requirements. Overall, Mtar Technologies seems a safe stock from the point of view of debt and interest coverage. The table presents debt-to-equity ratio and interest coverage ratio for the last 5 fiscals. Promoter shareholding. A concern is a reduction in the promoters' shareholding from 62.24% pre-IPO to 50.25% post-IPO, and then further down to 47.18% as of December 31, 2022. The promoters have sold a 3.07% stake since the listing. The table below highlights the recent shareholding pattern of the company. Future plans of Mtar Technologies. 1. Bloom Energy, a key customer of Mtar, has signed a $4.5 billion deal with a South Korean conglomerate. This presents a large order of 10,000 units for the company during the 2022 to 2024 period. 2. It recently started production at its sheet metal facility. This will result in higher order inflow in the coming years. 3. Furthermore, the Adibatla unit will also be producing specialized fabrication products for critical structures in the clean energy industry in the coming quarters. 4. The board of the company has approved setting up a dedicated electronics manufacturing vertical in the future. Thus, Mtar will be making investments towards setting up an EMS facility in the near future. In conclusion, we are now at the end of our fundamental analysis of Mtar Technologies. The expansion plans and quarterly sales growth make it an attractive company. However, at present P/E of 57.8, is it a growth company or simply overvalued? The earnings growth and stable margins will likely result in shareholder gains in the future. Do you think Mtar Technologies will be able to deliver more such impressive returns in the future to its shareholders?